Good morning, everybody. Today is December the 1st. This is Monday. This is our morning update. First of all, I hope everybody had a good turkey day. My turkey day was pretty good. I did what you're supposed to do: eat way too much, watch football, and take a nap. So it was perfect. And I hope yours was as well. So let's zoom in on the S&P 500 real quick. And you can see over the last 4 or 5 days that we have went up above our trend lines and we've maintained that level. So I'm close to wanting to reset my trend line. You see this this top blue line right here. Where is my mouse? There it is. You see this top blue line. This is my top trend line, and I don't draw a trend line on the bottom for the S&P 500 because this blue line right here is my 50-day moving average, and that's what my bottom is. So the top of my trend is right here, and if I back out just a bit, you can see that we extended across all these humps, and that's been our previous trend line. Well, we're ready to draw a whole new trend line. I just need to find, I need it to breathe. I need the S&P 500 to breathe. We're way past the breathing point. It looks like we may get that breathing point today. I'll explain that in a second. But we need it to breathe and move down so that I can go ahead and try to figure out where the new trend is going to sit. So we'll be watching that over the next 3 or 4 days and see if we can get something to happen and maybe give you some new trend lines to go off of. So right now we're outside of our trend and we're not really totally sure what our trend is going to be. Now as we move over here to SPY, this is our ETF based on the S&P 500, has the same stocks in it. And it moves almost, identically. And it's through that ETF that we can see how pre-market trading is going. So you can see on Friday we closed at 207.20. And if I scroll down here to the minute chart, you see we're at 206.27. Well, every 10 cents is worth 1 point on the S&P, so that's roughly 10 points, actually 9.3 points. Down currently if we were to open right now, and we got about 45 minutes before we open. So we are going to move down roughly 10 points. That's good. That's going to move as close to the 20-day moving average on the S&P 500, and I would look to get a bounce. If we don't maintain that line and get a bounce off the 20-day moving average, you can see we got quite a drop from the 20 all the way to the 50, and so that makes me a bit nervous. So hopefully we can get a good bounce off the 20-day moving average and move up. And once we breathe down and get a bounce maybe off the 20-day moving average, we can start to look at maybe some new trend lines. But we need to let it breathe in order to do that. Also, moving down is going to allow the 50-day moving average to kind of catch up and move up as well. So maybe a 2-day run close to the 20-day moving average would be healthy for the S&P 500, but we'll see what happens. Got no plans other than, again, standing on the sidelines and watching and letting this materialize and give me a better idea of what to expect. As we approach the end of December, though, I expect this December to look exactly like last December. Investors like to end on a good note, so I would continue to see the S&P 500 move in a normal way, steadily moving up, and maybe finishing December the 25th on a high note. That's my expectations. Of course, anything can happen in the news. Now, we do have some bad news to support a breathe down and move down. Japan was downgraded by Moody's, and also the numbers are starting to come in over Black Friday, and they're not near as good as what people had hoped. A lot of people, while the economy seems to be picking up, a lot of people are hanging on to their money. So I don't know if they don't believe that the economy's picking up, or they're just saying, it's been so long since we've had a little cash. I think we need to hold on to it to, I don't know, keep the lights on and buy groceries. But whatever the reason is, people hung on to cash, and Black Friday was not near as profitable as one would like. And I'll give you an example. A lady in our church as a store manager for Tommy Hilfiger. And so she asked a number of us if we'd like to work as extra Christmas help on Black Friday. Well, me and my oldest son decided we'd go do that. So we went up there on Thanksgiving night. We went up there at 8 p.m. We opened the doors at 9 p.m., Black Friday. And on Thanksgiving, okay, we opened the doors at 9 p.m. And it was pretty busy, and they tore up the men's section where I worked. But around 1 o'clock, it really kind of tapered off. And there were only 3 or 4 people in my department. And I was able to get everything cleaned back up and have that whole section looking good because I didn't have very many customers to deal with. And she had told me that Tommy, the previous year, had done $114,000. Well, when it was all shook out, they did close to about 80. So they were roughly $35,000 off the pace from the previous year. That's a significant drop. Now, while that's just one store and a particular chain store, I think it's kind of indicative of what we've seen throughout the shopping season, and probably we'll see throughout the extended shopping season all the way through to December. And that will make investors a bit nervous as well. So that's part of the reason why we see a down day today. Moody's downgrading Japan, and Friday's numbers, or Black Friday's numbers, coming in and not being as rosy as they would have liked. Anyway, that's all I got for today. I will talk to you tomorrow. Peace out. Bye.